In this video, guys, we're going to look at is a doji bullish or bearish. Stay tuned. Hey traders, warm welcome to you. All right, so common question is a doji bullish or bearish? It's not clear. Sometimes we have candlesticks that are very obviously bullish. You know, if you have an outside bar or we have a bullish engulfing, that's obviously bullish because it's taken out the whole of the Friday's range. It's green in color and it looks very, very obvious. But a doji, and often people say, well, a doji's indecision and stuff, I'll get to that in a moment, but it's going to depend on the position of the candle as to whether you can perceive it as number one, bullish, number two, bearish, or number three, irrelevant. And bear in mind, guys, as with many candlestick patterns, most of the time they are present in an irrelevant environment. So rather than just going and saying, oh, there's a candlestick pattern, I've got to trade it, you have to look at the bigger picture. Always take a step back, take your blinders off, and look and say, right, where are we? Where is this occurring? Is this meaningful? What do I mean by this? So let's talk about doji first, and we'll look at that in a second. So a doji is basically indecision. So there's different variations of doji, and sometimes you have a doji where the open and close are near the low or near the high, or you've got a longer wick or a longer tail. But just talk about standard doji for now. Generally speaking, it's like a cross shape. So what does that actually mean? It basically means that, hey, there's, you know, we know the candlestick guys know what they're all about. There's your high, there's your low, there's your open and your close. So what's actually happened? Let's look at that intraday. So if you assume it's a daily doji, we've pushed to highs, we've pushed to lows, we've opened and closed in exactly the same position. So pretty much all we've seen on an intraday chart is this. We've kind of moved up a little bit, we've moved down a little bit, and we've come back and we've done exactly that. We've not had a massive range either. Normally these dojis don't have huge ranges. Well, there are variations, of course, but standard doji just looks like a small cross in the middle of your chart. And generally as well, if you're being very, very picky about this and pedantic, you'd say that the open and close is right in the middle of the range. So it hasn't gone any further to the highs or further to the lows. In the real world, guys, we know there's a little bit of flexibility there, but you get the idea. So it's indecision. It's no one side is taking control. It's gone one way. The auction process has pushed the price up, hasn't gone very far, it's rolled back again. And again, it doesn't matter whether the first push was up or down, it's still gonna have the same pattern. So, is it bullish or bearish? Well, as you probably guessed straight away, if we just look at that, is that bullish or bearish? It's neutral. We've tried to push to highs, haven't been able to claim and hold those highs in the intraday. We've pushed to lows. Again, it's just natural selection and price discovery, for want of a better word. However, when we put this into different context, now we can start to add a little bit of bias towards a bullish or bearish side. So if we imagine this scenario, okay, now if this was sitting in, let's put this one first. Let's say we've had this range bound environment and bang, we get a doji right there. Do you think that's bullish or bearish? You've got it, it's neither. It's meaningless, it's irrelevant, it's right in the middle of a daily range, it's been sitting in that range for a month or whatever the time frame is, and we're getting indecision in between indecision. We've already got indecision because we've got a range bound environment, but we've now got it here. So again, if you see that, and in the most cases, this is where you're going to see it, because ultimately, guys, you know, if the broader time frame is indecisive, you're probably going to get most days are indecisive. A little bit of upside move, a little bit of downside moves, a little double top here, double bottom there, little mean reversion type plays to be had. But if we're looking solely at what this means, it's irrelevant. Now, if we put it into a different context and we say, okay, what happens if we have a really big drive up and then we get a doji right at highs? Is that bullish or that bearish? Well, you can start to have a little bit more thought about what's going on here. Okay, we haven't necessarily pushed to new highs. We pushed to new highs and failed, but ultimately we still found buyers at lows. We didn't push low and close lower. A bearish, well, more of a bearish. Again, you've got to look at the higher time frame and believe that this is still bullish. But a bearish daily would be, you'd think, if sellers have suddenly got a massive premium what they could have got, say, a week ago, you'd think at some point there'd be a big bit of selling coming in. But if you're seeing this, it almost can be interpreted as a pause rather than indecision. So whilst this is indecision, no one's really got charge of it. Here in this scenario, after a big drive, it's almost to be looked at like it's just people taking a breather. Sellers still haven't perceived this as extreme value, or if they have, there's still buyers standing there soaking up all those offers. But in fact, the doji is saying, right, we're accepting this as a new price level. We've had another day where everybody has accepted it and it's become a new value, if you like. And so the bullish weight gets added to the doji. Because rather than us seeing a really horrible candle, especially at a couple of dojis, let's say a couple of candles, kind of a few dojis, ultimately, it's an acceptance of highs, and you would expect that the next leg would be a further push up. It's just a pause, it's a breather, buyers are backing off, they want to see what happens, they want to see if it drifts any lower so they can step in. Sellers are, they're not interested. Anyone who's been short is probably hoping that it comes lower. Anyone who's sold into this has sold, taken their profits and moved on if they are a seller. So you've got to think about who's selling, who's buying, what's going on. So in that scenario, I would put more of a bullish weighting to it. And again, if you flipped it on its head and you had a massive down move in a doji at lows, it's just a pause. It's a pause for breath, and it's almost forming a broader flag. If you think about it in terms of the chart pattern of a flag, you've got the pole and you've got the flag pattern. And sometimes we get little range bound environments like this, and that's how I classically would like to draw it. But very often, you're going to get little candles to the downside, little candles to the upside, a few little dojis mixed in, and it's the digestion of price. Same kind of thing if we thought very, very quickly, guys, let's look for a downside one. Imagine we had a big level of support here, market suddenly broken through, and then forms a little doji underneath. That would be considered bearish, in my opinion, rather than neutral, because we've had prior price has pushed through a level, and it's accepting price. So rather than us looking at it as interpreting it as indecision, we're interpreting it as price acceptance, because the longer price stays above a level or below a level or at an extreme level after a big move, there are some exceptions, but generally speaking, the more you would expect that to continue, because the more people are accepting that as the new price point. And if the momentum is going to continue on, it might not be as aggressive, but you would consider perhaps that actually it's going to go lower and lower and lower in this example. And actually at the moment, kind of a topical perspective, there's a lot of charts that have done this because of the coronavirus. Regardless of when you're watching this, there's always going to be some charts that are exhibiting this. Push lower, and have just sat at lows and formed these kind of dojis, and they've tried to push up and tried to push down, but it's it's indecision. People are saying, well, it's indecision. Well, actually, no. When you look at it in the bigger picture, it's acceptance that is the new price value. It's not considered this is just an opportunity to buy and we had a V-shaped reversal as we have done in many of the tech stocks. It's an acceptance of price, and so I'd be very wary if I was a buyer of buying on a doji like this, and if I was a short seller and I was short on this, I don't think I would initiate a press short just because of a doji, but I would be very comfortable if I was already short to see a doji. It's not the sort of thing that you're going to go, oh great, I've seen a doji, woohoo, let's all get excited and let's load the boat on the short or long side. But it's just something that gives you a bit of a clue and says, okay, that's reasonably bullish after we've seen this. That's reasonably bearish after we've seen this. Or in most scenarios, which is what it's going to be, it'll be sitting in the middle of a range or in the middle of chop, and in which case there's no big emphasis one way or the other goes. So anyways, it's a doji bullish or bearish, depends on the price position, depends on what happened prior to it, but it can be either depending on where you're seeing it in your chart. Take care, keep your risk management. I'll see you in the next one. Bye-bye.